So let's go to the revenue checklist. Okay, I'm not going to bore you by reading the whole thing to you, but I just want to give you the highlights. Notice how it's laid out. Date last reviewed. When you review it, you put your initials in there. And again, here's the comments. So you can't just put NA. You have to put an explanation for why it's NA, right? So we're going to go over the invoicing. Are the revenues correct? Do they make sense? Check with the client on the invoicing process. Make sure you understand that. Has everyone been billed who should be? Is there a way to check the revenues? Agreements to tie to. This is a big one. I learned this the hard way because I had clients where I missed sending invoices out to their clients, and it was because or I should put it this way, what would have prevented that and what then did prevent it was I made sure I had a copy of every agreement that my client had with every one of their clients so I could go through those agreements and create a billing schedule based on those agreements so I'd know and have a way to check and make sure that everyone who should have gotten an invoice did. This is a way of verifying that your revenues are accurate, that essentially you've invoiced everybody that you should. And so it goes on. So you want to look at each of these things. Notice I've numbered and lettered each section. So, invoicing is area 1 under revenues, A through J, right? This is one that when I was going through it with my bookkeeper student here at schoolofbookkeeping.com, that she really honed in on and said, this is a great one. Does client use classes? If so, run a P&L by class and check for accuracy. These are the kind of little things that we tend to not bother to do. Sales taxes, review to be sure it's current, make sure that the payments, that the returns are filed, and here's where I had to change one of those Microsoft OneNote references over to Evernote, right? Make sure you have the State Board of Equalization, or that's for California. In your case, it might be any other state, the appropriate Department of Revenue contact information. Keep it in Evernote or keep it in the QuickBooks vendor profile for them. Just make sure that you have their information at your fingertips, because when you're reviewing sales tax, there often are times when you need to call and check on something. And then, of course, review sales tax returns year-to-date. Compare with the P&L to ensure consistency. Because here's what happens, and this is so important. The period gets filed with the state, and that's based on what the revenues were as of a certain day. Now, just like what often happens in terms of income taxes, where somebody goes back into the prior year and changes something after the tax returns have been prepared, even within the same year, if I go and change something from last quarter and that quarter sales tax return has been filed and the change I've made impacts income, guess what? My books no longer agree with what I filed with the state. So really important to make sure that stays consistent. Classic mistake people make. We issue a refund. For whatever reason, the refund was never booked, right? We filed the sales tax return for the quarter. Maybe it wasn't even done until after that. But the point is, what I've seen happen is the refund is issued, and let's say it's backdated into that quarter, maybe because somebody wants to match that up with the time of the sale. Whatever it is, the problem with that is if that sales tax return's already been filed and I issue that refund includes refunding the sales tax, which I would then need to recoup from the state. And if I don't put that in the current period, or for that matter, in a period that hasn't been filed for yet, I'm not going to get to recoup those sales taxes, right? An invoice will increase the amount of sales taxes I collect and owe. By contrast, a refund, or if we're using QuickBooks, a credit memo, Xero uses a credit kind of thing also. Whatever form I'm using, when it has the effect of reversing the sale and there's sales tax associated, then it should reverse the sales tax, which means it should lower what I've got to pay in for the next period. So really, really important to make sure that your revenues on your books are consistent and stay consistent with what you filed with the state. That's something a lot of people overlook. Collections. So again, you have your checklist items to make sure that the collections process is being handled properly and timely so that you don't let invoices get too old. That's all pretty obvious, right? But again, these are questions that in them sort of contain suggestions about how you can go about that process and make it really efficient. Then I love this part, because here's where we get to provide incredible value to our clients as bookkeepers or accounting professionals. Looking at the customers. Are we getting new customers in? And this might seem like it has nothing to do with bookkeeping, but the point is that as the bookkeeper, you're in a position to be on top of this kind of stuff. And if they're not adding to their customer list on a regular basis, it's worth going to the client and saying, hey, client, you haven't brought in any new customers in the last quarter. What gives? Why aren't we adding customers? Is it just that we're so busy servicing existing ones? But what if we lose one? Anybody who owns any business will tell you that new customers tend to be the lifeblood of the business. Got to always be getting new customers in. Otherwise, you run the risk of sort of getting stagnant and not growing the business the way we would want to.